The real estate market is a nightmare, according to Realtor.com. I will agree and strongly disagree. The real estate market is a nightmare for most people. The real estate market is actually magical for real estate investors. What do I mean by this? What is going on? How long will it last? Well, folks, buyers markets don't last very long. There is no question that sometime in the future, something will happen, rates, jobs, something, and this buyer's market will disappear quickly. Again, yesterday we learned that once again, existing home sales was below 4 million annualized. I believe it came in at 3.93. We also saw that median price, hit another record. This fact continues to bamboozle the crash bros, where we continue to set higher prices and lower transactions. But again, I have no problem believing that the real estate market is a nightmare. In fact, if you are in the real estate business, if you are paid on transactions, you have been asked to and lived through, at minimum, a recession, and I would argue a depression. 40% transaction crash is depression level events. That said, this buyer's market also means that sellers are living through a nightmare. You now have more competition. You have, lower demand. Many sellers have wish pricing still. They think it's 2022 or 2023 and are mispricing. Flippers are living through it right now. Longer hold times. They didn't buy right. Their holding costs suck. Flippers are in trouble. But who wins? Frankly, the only winners, and pretty much the only winners for 2024, as I said on the Ryan Pineda show back in January, are real estate investors. Real estate investors are winners. We are doing the work. We know our markets. We assume fixed rate 30-year debt. We make sure the asset cash flows day one, and we just do the work. I am seeing more and more of you get amazing deals. Many of you are getting deals 20, 25, in several cases, 30% below list price. Folks, these are deals that will very likely make you rich. And in 5 years, you will look back on and go, wow, that was a great deal. Also, as you guys know, I'm looking to start writing some offers in Las Vegas. In fact, if you're watching this and you are a real estate agent or you are a home seller and you are interested in perhaps seller financing, please reach out to me. I want to thank Michelle. Michelle owns a rental in Las Vegas. She is looking to get out of the rental game. She reached out to me. I don't know if this deal will go anywhere, but again, I am happy to have discussions around properties. I did send Michelle a rough outline of a seller financed note that I'd be willing to execute for her property. It is a win for her and a win for me. Again, it is, for me, it's all about creating a win-win situation. In this case, for Michelle, she gets mailbox money of about $1,000 a month. I take on responsibility, obviously, as the tenant, because I'm now the owner. I get 30-year financing. She gets some money down at closing, and we all win. Now, I don't know if this will meet Michelle's requirements, but we have a little bit of room to negotiate. But at the end of the day, it has to be a win for Michelle and a win for me. Else I will just keep writing disrespectful offers on the MLS. But hey, if you are a real estate agent or broker in Vegas and you have a seller that might be open to seller financing, hit me up. Just like Michelle did. You can go to me on Instagram or just off my website like Michelle did. So Michelle, if you're watching this, thank you for the opportunity. Again, we can negotiate a little bit around the model that I sent you yesterday via email. But again, I want you to win and I want to win as well. Mark Zandi is being quoted a lot from a tweet that he put out last week. Something I took down this morning is, housing will thus soon be in a full-blown headwind to the broader economic growth. Now, when I read that, it's got the right level of doom, right? Fear. But when I step back as an economist and I look at what's happened in real estate for the last 3.5 years, I'm like, dude, real estate's already been in a recession or a depression. We are already at these very, very low levels. Do you think we're going down another 40%? The answer is no, of course not. We certainly have seen or are at or near the bottom. Some people just have to sell. So again, this is, to me, this is almost a sign of the bottom. When you have the talking heads in the doom kind of talking about, hey, real estate's going to be a negative contributor to GDP. And my answer is, where have you been? It's been a negative contributor to GDP for years. In fact, as you know, I suspect by September, it will be positive for GDP. But again, we'll see. I might be early, but we'll see. Early October, we'll see what existing home sales say. Redfin says buyers are backing out of deals at higher and higher rates. Why is that? Again, obviously, we've been talking about a lot of loans being denied, but Redfin actually brings up the next shoe to drop. Buyers are finding better deals. So you as a buyer might be used to finding an opportunity and thinking it's scarce. Then you get into escrow, you go 10 days, and you find a better house at a better price. What buyers are doing now is canceling their existing contract and opening contract in another unit. This is just part of a buyer's market. It frustrates the sellers, frustrates agents. But again, the real estate market is a nightmare for everyone except investors. Investors, trust me, in 5 years, you are going to look back on this time and go, that was a buyer's market. Those were the good days. Buyer's markets don't last forever. So again, remember that, or you will be telling me in a couple years, Zuber, you were right. So we'll get into that. Looks like rates are up again today. The 10-year note is up. Why? Jobs. Weekly unemployment claims beat again. We are now back below 220,000. Remember, folks, we baselined at 220 for seemingly 6 months. Then we spiked all the way to 250. We were getting concerned. It was a yellow flag. And then bingo, bango, we are right back down to below 220. In fact, the estimate was 227. We came in at 217. We also got new home sales at 7 a.m., which is right when this show kicked off. So I'm trying to look on my phone and see if we got new home sales. Oh, yes. New home sales came in at 627,000. That is up ever so slightly from 623 the previous month, but below expectations. Just like existing home sales, new home sales are below expectations. This is all what I've been telling you. The summer months, June, July, August, are going to be ugly, but also the bottom. But yes, we got another nasty new home sale. I didn't have price or anything. I'll report on that tomorrow. Let's talk about some earnings. We are in earnings season. We got a whole bunch of them, some tech, some consumer. I'll just go top down. We have AT&T, beat top line and bottom line. I was shocked. It's shocked to me that AT&T made $4.9 billion net income. Wow. Tesla missed on top line, bottom line. Frankly, had an ugly report and a pretty disastrous earnings call. Auto sales down for the second quarter, year on year in a row. Looks like robo-taxi is now being talked about next year. Just ever moving date for Elon Musk. ServiceNow beat top line and bottom line subscription sales up to $3.1 billion. Wow, $1 billion. Not only that, but ServiceNow raised guidance. That's a strong stock company. Alphabet or Google beat top line, bottom line, raised guidance. Said that their AI Gemini is gaining momentum. IBM missed on revenue, beat on earnings. Software was up 10%, consulting plus 3%. They did highlight that their AI book of business was now at $7.5 billion. Wow. Like Tesla, Chipotle had a second weak quarter, second sales decline in a row, just like Tesla, 2 quarters in a row of sales decline. And Chipotle went one step further and cut guidance. Yes, Chipotle cut guidance. Same store sales down -4%. Who else do we got? I think I got some more this morning. Yep, we got one more. We got American Airlines. American Airlines beat top line and bottom line, however, lowered guidance. Consumer weakness and flat corporate travel. Yes. Goldman Sachs trying to warn you that a correction is coming to the stock market. Goldman Sachs really warning you, like Dan Bird has, about the summer months. They said that correction in stocks may be looming as market sentiment is overly optimistic and retail is ultra bullish post Liberation Day dip. Let's congratulate everybody who joined school. We had a bunch of people join school, which is awesome. Remember, you get Casey from Brick by Brick this Sunday. She was a stay-at-home mom that turned to an Etsy store to find the down payment money. It's a very, very inspirational story. Next week, you've got Christian buying apartment buildings at 30 years old, very creatively. But people who joined school: Chase, Jamie, Jeff, Linda, Julie, and Baron. I want to thank all of you for joining. Please introduce yourself, right? Get involved, get all those free goodies, the education. Remember, we have 7 days a week accountability calls. So please find the one that fits your schedule. Look at what Jen sent us. Jen sent us a super sticker, $4.99. Thanks, Jen. I appreciate that. Very nice of you. Thank you. Good luck on the house. I appreciate that. Yeah, I mean, again, Michelle reached out to me. I love how YouTube, this channel right here, probably the daily financial news. Michelle saw it. She's a landlord in Vegas, and she's like, "Hey, you want to buy? I want to sell. Let's see if we can make a deal." She's been very open. She's been very, very nice, and maybe we'll work something out. Maybe we can't. For me, obviously, day one, I have to cash flow day one. Two, I want to come in with, I think in this case, it's just over 10%. I think I'm coming in with 40 grand. And I'm looking for a long-term note, no short-term notes. But if Michelle likes it, we can do something. If not, it's okay. No hard feelings. I'll just keep writing offers out of the MLS. But yeah, it's fun to see how this YouTube channel could bring me deals, right? Deal flow. It's magic. Here's an important one. What is the magic interest rate to unlock the housing market? If you've been watching my channel for any length of time, you know that answer. But it looks like Realtor.com now agrees with me. I have been telling you for a long time that 5.99, anything with a 5 handle is going to be magical. And according to NAR, a drop to 6%. Again, I argue, and it means nothing on the payment, but it is absolutely 100% psychological. To me, it's not 6%. It's below 6%. It's 5.99. We got there briefly, I want to say late last year, and the market unlocked. To me, it is 5.99. According to NAR, a drop to 6% would unlock, get this, folks, unlock 5.5 million buyers. I want you to think about that. 5.5 million new buyers are unlocked at 6%. According to National Association Realtor, inside that 5.5 is 1.6 million current renters. Why are those numbers important? Well, folks, do you happen to remember how many homes we have available? How many homes do we have available below the median? Think about it. I mean, seriously. Right now, according to Housing Wire, the latest data I have on single-family homes, there are roughly 900,000 single-family homes available at all price points. And if you've been watching this channel, you know that there is a disproportionate amount above the median, right? The broken housing market. Well, if for some reason we get, a spike in unemployment or a negative GDP print, or Powell does this or does that, and we get a 5.99 mortgage rate, we're going to unlock 5.5 million buyers in a market with 900,000 listings. And again, I would argue, gosh, let me get a fair number. I would probably say 350 to 400,000 of the 900 are entry-level housing, even possibly entry-level housing. That 400 is probably high. So again, 5.5 million into a market with 400,000 below the median. Yeah, it could get wild and wild quickly. I guess lastly, I'll talk about it since I got two more points that I noted, and we'll do a clean sweep of my 2 hours of reading. Nestle, yes, the maker of my favorite dessert or candy bar, Kit Kat, Nestle, says they are considering further price hikes given commodity prices rising. And then finally, if you do live in the Bay Area, we are now the fourth most insanely priced real estate market. Folks, in San Jose, California, you need to make a whopping $370,000. Yes, not 100, not 200, not even 300,000. You need to make 370 grand to afford a median priced home. That is wild. Folks, remember, join school. We're having those Sunday conversations. You got all the accountability group. If you watch this channel, you are a wealth builder. One of the things I know about being a wealth builder is there's not a lot of us. There's not a lot of us. What I'm trying to build inside school is that one community where everybody is a wealth builder. You may be at the beginning of your journey. You may be in the middle. Shoot, you may be at the end. But you can learn, you can help, you can mentor. The forums are blowing up. Lots of activity, a lot of introductions. Give it a shot. Heck, if you work with Mark, the financial firefighter, you can even get the first month reimbursed. You got all that education. You get the chance to talk to millionaires on Sunday. We're just having a lot of fun. Folks, take care. That is the daily financial news. Like, subscribe, comment. Again, remember, the real estate market is a nightmare for everyone except investors. Peace.